If you're watching live, please type in hashtag live. Now, a lot of people watch our replays. If you're watching our replays, just type in hashtag replay just so I know that you're watching.
Property guru George Markoski from Positive Property Solution joins us now. George, good morning to you.
How are you, George?
Our goal, our unstoppable mission is to empower 10,000 Australians to create financial freedom through investing in property using the Markoski method. Okay guys, we've got 10 seconds left. Can't wait to show you a great, amazing session tonight. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Hey, hello, George Markoski and Belinda Flaherty coming to you live tonight.
Awesome, loving it.
So look, I love what the videographer's done at the end of that video with violins. I just really enjoy it. I love the violins lately for some reason. Now,
Violin puts a bit of motion behind it. It gets you going.
It does. Now, look, what I'd like to do is just, if you've joined us live, please type in hashtag live. And if you're watching the replay, I'd like you to hashtag replay. Hi, Lisa. How are you? Welcome. Hashtag replay. Now, we're on the main site, Australian Property Chat, but also in the Positive Property Inner Circle. So we're in both now. And tonight we've got a really good session. And I'm going to be talking about the worst thing to do in a property boom. I don't know if you noticed, I don't know if you heard the news, we're in a property boom. And I'm going to talk to you about, hey, how you doing? I'm going to tell you what you shouldn't be doing. And I'm going to be explaining to you what the wealthy do during a property boom and what the ones that aren't don't. Belinda, someone's saying hello again to you. Mariana.
Who's that? Let me have a look.
Anyway, so guys, now if you're watching this, you're part of our tribe, part of our movement. And you know what we are? We're part of the FIRE movement, financial independence, retire early. But we call ourselves freedom fighters. So freedom fighters, welcome. Namaste.
Welcome.
Yes, welcome. Now, I know Belinda's got quite a few questions that we're going to go through. And we've got the team.
Oh, yeah, I've got to find them.
Yep, we've got the team that are going to monitor the stuff. And what I want to do, freedom fighters, that's right, that's correct. That's what we are. That's what you are.
Love it. Love it, love it, love
So
it.
what we're going to do is I'm going to go through and talk about the difference between the wealthy and the mediocre, median household people that invest in property and what the difference is. Now, I'm curious, guys, if you're watching, please type in, what are we fighting for? We are fighting for financial freedom. So what our entire goal is to empower 10,000 Australians to create wealth through property investing using the Markoski method. And every Wednesday night we go live and I explain it to people, we show people examples of how we're doing this. And what we're doing is we're building a better world, one family at a time. So there you go. So
Love that. That's amazing.
Yep, and what I'd like to do is, the people watching, please tell me what you think the biggest mistake is during a property boom. What's the biggest mistake that people make? Because you're going to be surprised at the biggest mistake there is.
Write it in there, guys.
Yeah, type it in the questions because I'm going to go through it now and tell you what it is. I wrote a list here of the biggest mistakes. But the fact of it is, the difference between wealthy investors and people that, don't do well in property, it's going to be very interesting when I show you the difference.
Someone wrote not buying. I like that.
Look, there's some.
Good on you, Lisa. That's awesome.
Well, unfortunately, Lisa stole my punchline. Thank you, Lisa, because Lisa knows what she's doing. But okay, what's the worst thing? You might think I'm going to say it's to invest in the wrong area. Nope. Not buying and missed the boat, but getting there. Okay, Nicola, you're not buying, but you get. Okay, so someone said, I'm guessing the majority of your wealth comes from either the sales of your book or you were born into wealth. So I'm actually streaming on quite a few platforms. So this is interesting. One, I wasn't born into wealth. So if you look at my story, I actually came from a family that struggled to make ends meet. And that's what really brought me on this path. The majority of my money comes from property investing, right? Because look, a lot of people say diversify, diversify, diversify. I don't know if you've heard that before, right? The fact of it is, not buying at the right time, right place. No. Or getting the wrong strategy. No. Not getting the right team around you. No. Buying the wrong structure. No. Wrong area. No. They're all good. They're all excellent answers, right? But this is the one thing you shouldn't do during a boom. And that is to do nothing.
Can you hear me now?
Belinda, I can't hear you. Yeah, I can.
Oh, really?
Yeah, book away. That's right. Yes, not buying at all. That's exactly right. Right? Because doing nothing is the biggest way to miss out on this boom. And look, the last boom back in 2009 and 10, I was telling people during the GFC, I said, look, my predictions have come right again. See, a year ago to this date, I remember COVID just hit Australia and everyone was shitting themselves. And what happened was we had a lot of members that were scared too. And some of them tried to quit and other people said, I can't buy now, and pulled out of the investments. But you know what? Our core community of members, they listened to me. And now they're sitting pretty because they got those prices then, and you can see what's happening.
For sure.
Right? But the thing is, I said to everyone, look, there's a lot of fear in the marketplace. And, your Uber driver and hairdresser are telling you not to buy, right? But since when does your Uber driver or hairdresser know what a good investment is, right?
Exactly.
And the fact of it is, you can ignore them, right? And a lot of people were saying, oh, well, I've heard that. The thing is, this is the thing. Going against the herd is so hard. It's not easy. Because at the time, everyone was shitting themselves, and I was saying to people, invest. Now, the people that listen to me, they've made, tens of thousands, if not hundreds of thousands of dollars over the last 12 months. Because
Correct.
When everyone is saying don't buy, that's when you should be buying. Now, this boom is not even close to over yet, right? So there's still a lot of legs on it. So you need to get in quick, right? So that's the point, right? But the thing is, right, going against the grain and doing that is hard. It's very difficult. Getting out of your comfort zone is difficult. It's not easy. You've got to choose your heart, right? And the deal is, and you can quote me on this, because in a year's time, we'll be talking about this. In 2 years, in 2023, when we've already gone up 12, 20%, right? Because they're predicting, the experts are predicting 23%, 25% rise in the next 3 years, right? Now, that's a lot of money. So if you buy a $500,000 property, that's $100,000, right? So the point is, when I talk to you in 2 or 3 years, I'm going to say to you, what did you do? And if you did nothing, you're going to get nothing. I guarantee that. And I guarantee that if you do something, you're going to make something, but you need to still get it right. So the thing is, there's, what's happening at the boom now is crazy. People are going nuts and they're really just going in there, right? And just buying like crazy. Now,
yeah, absolutely.
You heard what Michael Jordan said about basketball.
Can you hear me, George? Are you getting a response, or am I?
I can hear you. Can I please get a replay of this? Thank you. Yes, there's going to be a replay of our podcast. If you watch our podcast, The Positive Property Show, every Tuesday it comes out. So Wednesday night live, next Tuesday will come out for the podcast. Now, Michael Jordan said you miss 100% of the shots you don't take.
Love Michael.
And is he right? Can I get an amen?
I love it.
Right? Exactly. So the fact of it is, Michael Jordan had it right. You do miss 100% of the shots you don't take. So the point is, if you've been sitting on your ass, if you're sitting on the fence, seriously, now's the time to act. Just saying it, you know what I mean? Because there's a boom coming and you can't afford to miss it.
No.
right? But even though you could dive in and screw things up, it's got to be smarter to educate yourself first. You know what I mean? That way you can avoid making stupid mistakes and you leave more money. Because, because who's running this boom anyway? Is it the investors, is those naughty investors gobbling up all the good properties again? No, it's not. It's actually first home buyers. First home buyers are rampaging going through, right? And it's basically all the first home buyers, right?
Yeah, wow.
And what they're doing is they're really rushing in, right? But see, I say don't rush, right? Because I always say buy when you're ready, not when you're rushed. That's what I say. It's a smart way to do it, because if you rush into it, you're going to make
mistakes. Correct.
Yeah,
absolutely.
Yeah. See, we've got a biggest boom in history coming up. So what I'm saying now is, fair enough, we've got the biggest boom. So you need to be urgent. I'm not saying don't be urgent, but not rushed. If you get what I'm saying.
It's almost like the slow and steady win the race.
Yes, but you still need to be urgent. You still need to be urgent, because otherwise you're going to totally miss out. But don't be rushed. Really get everything right. Be 100% comfortable before you do anything, and really get your, the two things.
Your ducks in a row.
That's right. The two things I'd want you to get right is really make sure they're top 100, and then make sure that the cash flow calculator, they work.
Do your due diligence. Do your cash flow calculator.
It's always worth being meticulous with any deal that you do. Right? That's the fact of it. So do you know 53% of first home buyers are bringing forward buying?
Wow. Didn't know that one.
Yeah. So I've got a few questions coming through, and
they're coming through thick and fast, George. So I think we need to get onto them.
And look, please, we're going to get there, but I really, want to talk about what's happening at the moment, right? Because
absolutely.
All
right, shall we go through some of these questions?
Well, look, there was one question that was really interesting on the group, and I want to answer this. Ant Fong had a question in the group about a property where he's got some Indian students renting it.
Yes. Oh, that's a good one. I was trying to look for that on the chat. I couldn't find it.
I'm going to go find it. This is the question. Ant Oni Fong. I hope I got everything right there with your name, Ant. So I have a 2-bedroom unit rented out to 4 Indian students for $300 per week in Parkside, South Australia. Parkside's a good area. I decided to increase the rent by $5 a week. They call me and say there are no culture of increasing rent when lease is over. He said he has a friend living in a place for 7 years and never increased rent. But I feel like my area, even rent $350 a week for a unit is reasonable price, and they have 4 people, not just 2. How should I reply? Great question, and I'd like to answer that for you, because Ant's been a follower of our stuff for a long time. So if you're out there, hi Ant, how are you? Welcome. Please type and say hello.
Let's give him some answers.
But this is what I'd like to say, right? 1, you shouldn't be managing the property yourself.
Correct.
Right? So we really want to make sure that, 1, you don't manage yourself. And the reason you don't want to manage yourself is because if you're managing it yourself, one thing is guaranteed, you're not going to get the right market price, right? And that's the reason of having a circle of safety. You can't be an expert at everything. So unless you want to spend 10,000 hours becoming an excellent property manager, don't do it, right? So you need to choose what you need to be good at, right?
Yeah, absolutely. That was a good one. He had another one on that.
I'm finished. I haven't finished yet.
Okay.
So the point is, and this is, so you got people like Steve Jobs, the guy from Facebook, what's his name? Mark Zuckerberg. We're on Facebook now.
Zuckerberg.
Steve Jobs from Apple. You got the guy that did Ford, Henry Ford. What have all these people got in common? These super successful people. I'll tell you what they got in common. They focus on what they're good at, and they don't do anything else. And what they do is they hire experts, right? So, Steve Jobs doesn't, well, not anymore, but he'd never actually serviced his own car or did his gardening or anything else like that. So, you renting your property out, unless you want to be a property manager, you shouldn't be doing that, and you should be hiring an expert, because, seriously, you're getting $300 a week. you probably could be getting 350, 365, 380, who knows? And that would be worth it itself. So you really need to get an expert in to help you. And that's the key, because the reason with property, it's not like ping pong where you got one player or two players. It's more like rugby where you got a whole team. And if you don't have a whole team in rugby, what do you think is going to happen to you?
You're going to get annihilated.
That's right. So here we go. So I've got someone here, just what we need, the rich to get richer. Listen to this. So you're fighting for financial freedom to help 10,000 families, but they have more money than the real people who need help. What is your advice to us who have got no money or credit, right, and want to invest in the boom? Because this sounds to me like some type of pitch so you can sell your book. Okay. So look, thank you for commenting. And then he said, I'm sure to buy your book, mate. Need some good toilet paper for my next camping trip. Look, at the end of the day, I can't help everyone.
Can I just say something? If you wanted that toilet paper for a camping trip, you'd have to wait 3 months, because that's how long it takes to get the book off Amazon.
Exactly.
It's a bestseller.
So it's already sold out, so there you go. But also, look, at the end of the day, whoever that is, you should probably leave our community, because you're not really a freedom fighter or anything else like that. It's not the right fit.
That's correct.
You're probably a great person, and you've probably, got a few challenges there. But, I really think we're building a better world by helping 10,000 people. If you don't like it, don't hang around here. Simple, easy. Simple. Okay.
There's plenty of other groups to go join. Join other groups.
Go to wehatemoney.com.au,
Yeah, We Hate Money. That's a good one.
Money is evil. Go to that one, Whatever. But probably wrong group. So there you go. But look, the haters are going to hate. That's the way it is.
Haters are going to hate.
And look, the fact of it is, right, that, the difference between the wealthy and the poor is that person there is a member of the poor. And I'm not having a go at the poor, but I've never seen someone be poor for a long time that has consistently not tried to do the right things and get out, right?
Yeah.
Because the point is, it's a lack of action, and it doesn't matter where you start, where you end up. So the fact of it is, this person, whoever commented about my book, whatever person that is, I wasn't born in wealth, and I really, had nothing. I came from nothing and built a multi-million-dollar portfolio. So I'm talking from experience. I've done this myself. I rolled up my sleeves and I did it myself. I've been there where I couldn't pay my rent. I've been there where I didn't have enough money. So I get it. It's hard.
I've been there when you were working 7 to 8 days a week, and really struggling, like you've been through it all. I've seen you with making a few mistakes with your portfolio investments, but you got it right. But it took you a lot of lessons and a lot of mistakes to get it right, but you didn't give up.
No, and that's the difference, because, because at the end of the day, right, a lot of people think success is a straight line with it's growing along, but really success is going to be full of potholes, and it's going to be full of challenges. And whether you want to invest in property, or whether you want a great relationship, or whether you want a great business, or you want a great career, great health, I don't care what it is, you're going to always have challenges. And it's about getting up again, dust yourself off, and learning from what you've learned and keep going. Right?
That's right. That's
the fact of it. So love
Let's
your
get some of these. George, how do we get down to the bottom? There's been a few questions coming down on this chat on the stream.
Okay, so should I save for a home deposit, or could I use my super instead? Any info is much appreciated. That's Mocko Turner. So what I'll do is I'll go to that one. Look, with super, you really need to talk to a qualified financial advisor for that, which I'm not. With super, really, you need a minimum of at least $180,000, and you want to be making, over 85,000 minimum, and even that makes it, because you want to be super conservative with super. It's because there's a lot of expenses, and you're not really getting the biggest benefit from property. What I like about properties and super, and we help our members get properties in super if they so desire, is because with super, that's the property you're going to sell when you retire, because you're getting it cash free. You don't pay any tax at all. Tax free, not cash. Lots of cash, but yeah. So that's really cool. You know what I mean? So that's what I like about it. But I'm always saving for a deposit for my next property, right? And what I'm doing now is the more properties you have, the better, because then your tenants are saving money in your bank towards your next property. And then you got more people helping you. So it's all about getting people helping you. The whole point of this is all about leverage, right? You know, leveraging the circle of safety, leveraging your equity, leveraging your tax, leveraging your tenants, leveraging your properties to help you make money. Because at the beginning, it's really difficult and you put a lot of effort in. But once you've started getting a few properties, they actually multiply themselves. What about DHS investment properties, pros and cons? That's Defence Housing Scheme. Look, there's a word at the end of it called Defence Housing Scheme.
Scheme.
Right? And seriously, I would not touch defence housing or NDIS or any of that fancy stuff with a 10-foot pole. The point is, where property goes up, right? Property goes up with the bread and butter 3 or 4 bedroom family home that a normal family or a normal couple can rent out, which is close to the city. So I don't touch mining towns. I don't touch boom towns. I don't touch DHS. I don't touch letting rooms. I don't touch any of that. I've tried a lot of different stuff. But you know what? We're looking for capital growth. Now, the problem with DHS is defence housing. There's only a certain amount of people that want defence housing, and it's complicated and it's not mainstream. So people aren't going to want to buy it off you. So it's going to be hard to make money. All right. So I really think stick to the bread and butter. You know, if it's too good to be true, it's too good to be true. All these massive ideas, what people say, you know, about, what do you call it? About investing in all these different tricks. Forget it. You know what I mean? There's no trick. The trick is, and this is the thing, I'm sick to death with all those companies out there that promise, you know, unicorns with bloody fairy floss coming out of their ass over the rainbow type stuff. You know what I mean? Like, you know.
Yeah, that's it.
I've had enough of the get rich quick mentality.
Quick mentality.
If you guys are to get rich quick, you shouldn't be here, right? Because I really think that the quick way to make money is a slow way, right?
Absolutely.
You know, the point is the tortoise won the race because he just kept going. And the people that try to make money quickly and they try to do NDIS or DHS or all these other different schemes and stuff like that, the challenge is, one, there's a lot of effort in, but the problem is the return's not there. The return is really into buying quality property and letting inflation do all the heavy lifting. You know? Because the thing is, I mean, properties double every 7, 10 or 12 years. And you can't beat that. So, you know, whether you're going to want to renovate or you're going to do something else, you can't beat that. You know, the whole renovation thing, it's a lot of bullshit. Don't even waste your time. I know lots of people do that. They buy a house, renovate it. They live in a really shit house for a while and move rooms while they're renovating it. Once it's good, they sell it. Then they live to another shit house. Forget that, right? Life's too short, right? You need to have a bit of fun. And really, at the end of the day, you know, a friend of mine's been doing renovations for the last 15 years. I've been buying and holding. I'll tell you what, I'm a lot richer than him. Not bragging or anything.
Absolutely.
I mean, I made over $1 million last year without lifting a finger. And that's because my properties did all the heavy lifting, right? So
absolutely.
Keep going. Copy that.
George, can I interrupt? We've got a lot of questions on the bottom of this stream. You're going from the top. Are you able to scroll down? Because there's some good ones just going down a bit.
Look, we'll just go one at a time.
All right.
Okay.
If you did get your questions answered, just say it again.
Okay. Yes, exactly. How many offset accounts do you have? We're streaming to about 10 places live at the moment, guys. So we've actually got quite a few people all around.
They're coming in thick and fast.
I can see we've got about 166 people at the moment online in the different channels. So sometimes we miss the questions. The best place is the Australian Property Chat. That's where we get them in the Facebook.
Absolutely.
How many offset accounts?
Question. Let's go.
Okay. Read it up, Linda.
How many offset accounts do you have to have for multiple properties? Are there that many banks and credit unions, etc.?
Okay, look, there are piles and piles of banks and credit unions and financiers all over the place. That's not a problem.
Correct.
The fact of it is, though, I like to have one main offset account, and that's on your family home if you've got a family home. Or if you haven't got a family home, your most expensive interest rate. See, the interest on your home is bad debt, right? You're not getting a tax deduction. So that's the one you want to reduce the most. But the point is that really at the end of the day, you want to get rid of your bad debt, then you want to get rid of your biggest interest rate and work your way down from there. But what I do is and this is what our members do as well. Every 6 months they get a review, they do a review, and we look at their offset, their equity, their income, and then find out, are they ready for the next one, or do we have to wait another 6 months? Because you've got to review this every 6 months. And we're always looking at interest rates, properties, what's happening in the market constantly. And that's one good advantage of being part of a group where you get someone else that's just looking after it for you and just making sure you get on top of it. Because you get busy and you forget things. And that's part of the reason I don't like managing my own properties, because you get stuck. You haven't put your price up for 6 months, 12 months, 3 years, 4 years. And this happens so often that people join our program, and the first thing we do is check out their portfolio and tweak it. We had one girl that joined our portfolio program, and she saved nearly $25,000 in the first meeting.
Yeah.
Right? And this is by just tweaking
that was before she was investing. Like, we saved her that. It was amazing.
Yeah. So there you go. It's pretty awesome. Do you recommend investing in South Australia? Yes, South Australia is great. But look, at the end of the day, there's some areas that are slightly better. South Australia is good. I would stick to capital cities, and I'd like to stick to an area that's high in demand, low on supply. There's only one thing. I'm going to repeat this over and over, guys, and I want you guys to memorize this. It's so important. There's only one thing that affects property prices. There's only one thing only: demand and supply ratio. That's it. Nothing else.
The old DSR. Bring on the
So
DSR.
if you've got a higher demand and less supply, what do you think is going to happen? Prices will go up. If you've got more supply and less demand, what do you think is going to happen? Price will go down. And that's it.
Right.
In a nutshell. Everything else around this just centers around this. That's it. That's what it is. So if you want to know the secret, that's the secret. You need to go to an area where there's more demand, less supply. How do you know that? There's 39 different metrics, and it's quite complicated because we're using Freakonomics to work out what people are doing and what they're doing with their wallet. But then we can tell what people are doing, and that's the way it is. So someone said, thanks, George. You're welcome, and thank you. I love people that are grateful. You know what our values are. Heart, have fun, everyone wins, build a better world. A, for being authentic, and I think that I am. I call it the way it is. I'm not politically correct. R, for radical responsibility, and the last one is thankful and grateful.
Thankful and grateful. Absolutely.
Okay, so is there a minimum amount of equity you need in your home in order to deposit property to help? Good question. Look.
Yeah, I get this one a lot, actually. This is a good one.
Yeah, that's a really, really good question. Thanks, Theo. So look, the best idea, if you want to know if positive property can help, is really have a talk to Charmaine. Right?
Yeah, Charmaine's the girl.
Charmaine is our onboarding manager, but she's also, helps with our clients, and she's really good at what she does. So if you want anyone that's interested,
she's the best.
If anyone's interested having a chat to Charmaine, just type in 15-minute call, and our staff will send you a link. Book in with Charmaine, have a chat to her, because there's not a minimum amount of equity, because there's so many different ways of making money. If you've done our 14-day challenge, you'll probably see we've got 9 different ways of buying a property.
Correct.
And one of them is with cash, the other one's with equity, and then there's another 7 ways of doing it. So there's a lot of different ways of doing it. And at the end of the day, it depends on how resourceful you are and how hard you're going to work. Look, I'll tell you what I did a while ago, and this is when I was starting out. I actually swapped 10 sets of cookware as a deposit on a house.
I remember that. That's hilarious.
Right? So I actually swapped 10 sets of cookware as a deposit, and I got a $50,000 deposit for these 10 sets of cookware. This is
not normal. That's not normal, George. Okay.
No, but I'm saying
It do whatever it takes.
That's what I'm saying. I used the BMW to buy a restaurant, right?
Yeah, that's right.
I do a lot of things outside the square. So when I first started, I didn't have the cash. So I had to really think outside the square. So when I bought my first restaurant, Spargo's in Adelaide, right? And Spargo's actually sold for a record price. The most expensive cafe sold in South Australia, over $1 million, right? And I had it for
What was
20
that?
years. I sold it
Yeah.
about 3 or 4 years ago, I think. Anyway, but when I originally bought that property, I had no money. But I said, I want it. So I had a BMW, and what I did is I ended up getting a loan on the BMW and getting some cash and putting the cash in. And it worked. And
Yeah. We've actually had members that have sold things like, jet skis and stuff like that. You do whatever it takes.
yeah, borrow money from family, get your family to help you with equity. Doesn't matter, because at the end of the day, if you getting out of your comfort zone and getting a deposit is hard, right? But you know what? Not having investment property is even harder, if you ask me. You just got to choose your heart, And sometimes you got to hustle. So
Yes. We like a good hustle, hustle pants.
I talk about passive income now, but when I first started out, it was all hustle. I was hustling. But this is the thing. You know what the rich do? The rich don't diversify. Gordon Buffett, you know what he said? Don't diversify. You hear this thing, diversify all the time, and then people go, oh, a little bit of property, a little bit in shares. No, you know who talks about diversification? People that went to school and learnt it out of a book, and that's, tell you, like,
Right.
a lot of financial planners say diversify. Put something in shared portfolio, a bit in this portfolio, a little bit here, a little bit there,
Sprinkle this, with that.
Sprinkle a bit on top, and there you are. Look, the rich, the real rich, what they do? They find one or two things that works really well, and they put all their money and energy into that, and they become excellent at it, right? 90% of self-made millionaires made it through property, right? They don't say safe as Bitcoin, safe as shares, or safe as anything else like that. They say safe as houses for a reason, right? So when borders open, immigration increases, demand increases, then boom, boom, time again. Good question. Look, it's already a boom because of how much money is getting printed at the moment. So we're already booming. So it's just going to get even bigger when the borders open. Yes,
that's right.
But that's not what's driving it. What's driving the boom is the printing of money. There's so much money out there that's inflation, and it's shrinking. So at the moment, if you were to put your money in the bank, it's going to take you 83 years to double it. You might as well get frozen first, right?
Yeah.
Yep. So look, that's the fact of it. You know what I mean?
What's the next one?
I'll let you go for the next one.
Do
you know that the average prediction of 39 experts, economists, putting property price increase at 12% over the next 2 years?
Wow. Wow.
Someone said, thanks heaps for replying to my question. You're welcome. I really appreciate people that are what do you call it?
Grateful. Very grateful.
Yes. And look, yes, anyone that needs a meeting with Charmaine, just type in, 15 minutes meeting, and I'll get our staff to book out so you can do it. Okay. So, Belinda, did you have some emails with some questions?
The other one was, that was the same guy that you just did about the Indians living together and not wanting to put the rent up. There's a question after that. I couldn't find it through my Facebook, but if you found that one, there's one straight after it or before it. I'm still looking. That's why I've been a bit distracted. I've been going through my emails.
Oh, look at this. Okay. Yes. So we're having a dual conversation. We're having one on positive property in a circle as well, which is great.
Right.
Yes. So Kathy just said very informative. Thanks, George. You're welcome. Definitely. And look, anyone in positive property in a circle, got any questions, I'm happy to do that. What I've been doing lately, guys, is we're building out our membership site. So no matter what question you've got in property, we can answer it. Yeah, that's what we're doing. And part of that is I'm getting rid of that little positive property logo because it was in my head, in the middle of my head. There you go. We got a little baby one now.
Little baby. There's a baby George.
Yeah. Anyway,
It's a baby George.
Yeah, so my goal is now I'm going to be answering every single member in our group. I'm going to answer any question they've got with property personally. And I'm going to be doing that, recording it live so I can share it with everyone and keep sharing the learning. And that way everyone gets a benefit out of it, and I'll put more effort into answering it properly. How good's that?
Yeah. Amazing.
That's right.
That.
Then what I'm planning on doing, there's an Israeli company, and guess what they're doing now?
Tell me.
They're building clones.
Oh, really? Has it got to that stage? Has it started? I know there was talk about it.
Yeah, let me tell you. So I'm actually thinking about getting a clone of myself.
Oh, no.
Yeah, seriously.
One's enough. One's enough.
Let me explain. It's a digital clone. Right? Have you heard of a digital clone before?
Oh, a digital clone. Fantastic.
Yeah, what they do.
I want one too.
This is what happens, right? What they do is they get an AI. It reads all your articles, blogs, emails, and books, and watches all your videos, listens to all your audio, right? So you need a lot of information. And then what it does, it turns it into actual intelligent digital being.
Yep, I have heard of this.
So then what happens is I'm thinking about setting this up. So we'll get this George online, and you can ask George questions. And because it knows everything I know, it should be able to answer in the same way. Obviously, I'm going to have to test him out first, right? I'm thinking about cloning myself, so there you
go. Fantastic. Hey, we've got a question. I just asked a broker. Oh, do you want to put that through? Oh, yeah. Okay, you'll put it.
Which Facebook group should be using other different groups? Hi, Julia. Yes, there are. So we, on Wednesday night lives, we're normally live in the Australian Property Chat. That's what we're monitoring. But we're also live in Positive Property in a Circle, and we can see you in there. But you're welcome to come in the general group. And together as everyone, I've gone live Positive Property in a Circle, but please come and join the Australian Property Chat. So that way I can actually see you more clearly. And then once a month, we do the monthly Sherp, and that's a private on the Zoom with our members. And what we're planning on doing now is I'm planning on every month bringing out a new expert. Last month, we had Adrian Cartland, who does asset protection. That worked really well. And there you go. So here we go. We've got a really big one now. So I'm going to look at this question and see if we can answer it, because that's what we're here to do.
Let's go for it. Let's do it. Let's do it.
Now, I'm trying to, not having much luck. Let me have a look.
Trying to read it out?
Yes, can you read it out?
Okay. I just asked a broker. He said, with my salary and a savings, I can buy a $450,000 house. Where should I buy? I am living in Adelaide, so I'm thinking either buy 2 or 3 cheap houses in Elizabeth worth $150,000 each, with a rental return around 10% with solar, or one house in Marion. I did a quick research to see if it's in the top 10 suburbs. I have a farm in Murray Bridge. Maybe I think of spending $150 to build a new house there and rent it out and buy 2 more in Elizabeth. I'm also thinking of Darwin as a highest solar fit.
Okay.
And in one of George Markoski lives, he said Brisbane was the best, but I have no idea about anywhere there. Okay. And then I can't see what else is next.
I have no idea about that. What everyone think. Okay, look, this is the deal. Good question, and thank you for answering that. That's Ant Fong. Now, great. You've got a borrowing capacity of 450. High five. Well done. Excellent. So one thing we're going to look at when you're buying a property is what is your goal, because the goal is really going to precede what you're really going to do, because people have got different goals. You know, some people buying a property, they want their kids to move in it one day. Other people want to retire there one day. Some people want to make money out of property. And I'd say most of the people listening to us, they want to make money out of property, right?
Correct.
So what I would say is if that's your goal, then we've got to start with the end in mind. Now, Marion, I did quick research and see it's the top 10 suburb. Look, you can't do quick research and find out a top 10 suburb. I'm sorry. I don't.
Why?
I don't think Marion's in my top 100 either, right? So I don't think that's true. The deal is, right, with every area, if you want to be an expert, if you want to be good, Malcolm Gladwell says you need 10,000 hours of consistent application and doing it well as well to get there. So if you think it's taken me 20 years, right? Took me 10 years, but I've been doing it for 20 years, but it took me 10 years to really get my strategy on knowing how to find areas, right? To do my research. Now, we're the only company in Australia that does the top 100, right? With a demand supply ratio. No one else does that. That's the fact of it. And the fact of it is, it's my proprietary algorithm that I use. And how do I know it's good? I mean, we have developers when they come, because I've got a developer program. If they want to know the top 100, they pay $50,000 for access to that list, and they have to sign an NDA, and they can't show anyone else either because that's our IP. So that's how valuable our research is. It's very valuable, and really, at the end of the day, the research is the most important thing. So what I'd start with, if I was you, Ant, is look at my no-go zones. At least make sure you're not on one of those suburbs. That's step one. 2, really work out your research. I don't know if you've done our 14-day challenge, but on the 14-day challenge, I talk about all the different stats that I use to do my research. That's going to get you in the right frame of mind, because there's fundamental to statistical research, and statistical research is the only thing that works.
Yeah.
And I'll go through.
What about the idea of buying 2 properties in Elizabeth?
Okay. No way.
What?
No way. Don't buy 2 properties in Elizabeth, because the challenge is there's a lot of land around Elizabeth. There's not a lot of demand, but a lot of supply. You're not going to make any money. I prefer buying more properties, yes, but you have to get the right value property. And normally, the property market in Elizabeth is not the right property market. So what you need to do is, 1, really get the right property. 450 is good. I'd be looking at somewhere between 350 and 450. So it's a good price range. It's excellent, right? And I wouldn't buy in Darwin at all. You said Brisbane.
I was born in Darwin. George and I used to go up there and do big events. It's a bit of there's a lot of government spending, but once the government spending's over or the military's out, it's a dead town.
He said high five. That's cool. So look, basically, you high five me back. Thank you, Ant. So basically, what I'd be doing is, right, I wouldn't spend money building a house
in Murray Bridge
either. You want to be in a capital city. So out of all those options, Marion's the best, right, by far. However, I wouldn't just go just for Marion, because you've got 3 suburbs there that you've shown me, right? I would really want to get out of the 16,000 suburbs in Australia. I would want to be in the top 100. You think about this. If you could be in the top 100 suburbs out of the 16,000, is that going to give you a better chance of making money? Yeah. You answer the question yourself, because it's up to you. But that's what I'm thinking, right? So that's the way it goes. So we've got...
And I suppose the other thing, if I could just add, a 450 property in the right growth area is going to be able to get you leverage to get another one, whereas you won't have that leverage in another, like places like Elizabeth, because you're not going to get the growth.
Or Murray Bridge or Darwin.
Or Murray Bridge or Darwin, absolutely.
That's right. And look, Darwin, there might be 1 or 2 suburbs that work there, but we really got to go with the consensus and go with the macro market first, right? There's
always macro market.
Yeah. So Marcy Mono's Cruise says, "Hi guys, love listening to this. Thank you, Marcy. I really appreciate it. If wanting to purchase first property, currently have a registered non-trading company, is it worth using the company structure of a trust or just a trust?" Okay, so the non-trading company, as long as the company hasn't had any trading in the past, because otherwise it may be quite risky. If you've used that company whenever in the past, then I wouldn't be using it. And basically, I'd be doing it in a trust and having the company as a trustee for the trust. However, if you're looking at buying an investment property or a property to live in, a trust is not the best way to buy it because you're not going to get the tax deductions. So the challenge is I really need to know your structure before I can really answer that question. There's a lot more to it than that, because it depends on what you're doing. First property. So that could mean owner occupier, could mean investment property. Put it this way.
Yeah, that's right.
As a first, let's say I was buying my first property at the moment, I'd be buying an investment property. A lot of people don't realize this, but rent vesting is a new way of doing things. You rent where you want to live and you invest where you want to invest, because that's how you're going to make quicker money. It's a lot quicker
Love
to
it.
make money.
Absolutely.
So I was rent vesting for quite a while. People don't realize this, but for a long time I had no owner occupier, and for a reason, because I only want to invest in things that are going to make me money, and owner occupier wasn't making me money. So I was investing in properties and I was renting. Now I bought my own property, but I really think rent vesting is better. But Master, you probably need to book in with Charmaine, have a chat to Charmaine. Anyone wants to
quick chat with her. Have a quick chat to her, Marcy, because that might just give you a bit of clarity to know what the next step is.
Is it better to go through banks or money lender for a home loan? And what percentage do you need for a home deposit? My apologies, I'm very new to real estate. Don't apologize. You're welcome. Look,
we all started somewhere.
Never, ever, ever go direct to a bank or a money lender. Okay. So I suggest you find a good broker, a broker that runs their own business, that have got at least 20 or 30 different places they can get you, they can shop for you. And you want a broker that understands property loans, because the challenge is a lot of people don't know how to structure a property loan. If you don't structure it right, you're not going to get all your tax deductions. But also, the banks like to cross-collateralize and take and really control everything you've got, and you want them to have less control. So the key is finding the right broker. And what percentage do you need for home deposit? You can buy a property with little as 5%. The percentage deposit is not that important. What's important is the numbers, right? So I don't care if I'm paying 5%, 10%, 20%, 30%. What I care about is, one, can I afford it? Is the property in the top 100? 3, cash flow calculator. Can I afford it? That's it. If you can afford it, you can do 5. That's fine. If you can't afford it, you shouldn't be doing anything. So someone said, haha, that's amazing. Thank you. I really appreciate it. You're amazing too. Thank you for watching.
Okay, what's another little question there?
I mentioned that public houses have been sold off, so demand for rent has gone up, apparently, Elizabeth. So many people are trying to squeeze into single homes. Look, yes, demand has maybe gone up for rent. Demand for rent's gone up everywhere, except for the CBD. So what's happened is units in the CBD have gone down quite dramatically, and everything else has gone up. But everything's gone up, everything. And yes, demand's gone up, even Elizabeth, but I still wouldn't be buying there. That's not enough for me. You know what I mean? What I need, I'm very clear. The thing is, having clarity and knowing exactly what you're looking for is so, so important, because that's how you know if you've got it. And you need to be so clear on what you want. Do you want somewhere where rent's gone up a little bit? Maybe. But you know what I want? I want properties that are going to double in the next 7 or 10 years. That's the only criteria.
Absolutely.
Okay. Listen to this. This is interesting. Very interesting. Some area like Moree is such a good rental yield. What has George thought an area like that to invest? Yeah, Moree's got an amazing rental area. It's a beautiful place with some springs and things like that. I've actually got cousins that own property there, funny enough. So
Moree, I'm not familiar with it.
Yeah, Moree's in New South Wales.
New South Wales.
So anyway, this is the deal. I stay out of one-horse towns. I stay out of anywhere. And look, if you've got a good rental yield, that's a sign. If you've got a good or bad rental yield, that's a sign not to invest in that property. I know it sounds crazy, but it depends what you're looking for. See, if something's renting out for 9, 10%, I'm not going to get capital growth. There's a reason it's renting out for so much, because no one's willing to buy the property, because a good area, people are willing to pay more for the property, and therefore the rent goes down. So when property prices go up, the actual rent as a percentage is going down, and then the rent plays catch up and goes back up. Now, when you've got a big rental yield, Guess what that means? Property prices are probably going to go down.
Yeah.
That's why you got a big rental yield. So this happened to mining towns. Mining towns have big rental yields, people going in there, and now the price of property dropped, and so has the rental completely. Like, for example, Gladstone. Yeah.
Yeah. We all know about Gladstone.
First investment property, currently have mortgage on residence. I'll reach out to Charmaine as I'd like to know when your next 14-day challenge is on. Thank you. Marcy,
Yep.
you're welcome. You're welcome. Should reach out to Charmaine, definitely. And if it's your first investment property, what you want to do is you probably more than likely going to be buying in your own name so you can get tax deductions. So what happens is, depends if you're buying with someone else, depends if you own a business, or depends if you're an employee. Those things all matter. And there's different ways of protecting you. If you look at our replay on my podcast for last week, if you look at what we talked about as in buying in a trust, we actually went through on that whole hour on this. Please check it out because that will clarify things for you as well.
Yeah.
Okay,
Beautiful.
so now let's have a look. But I feel like I did the maths area that I mentioned have higher rental return. Do you have any example of data that you bought before so I know what to expect? Okay, but I feel like I did the maths area that I mentioned have higher rental return. Do you have any example? Look, I don't really
This is a continuation of another question.
Yeah, I know, but the deal is though, the area that I mentioned have high rental return. What area specifically, and why are you looking for high rental return? Because looking for high rental return is not part of our strategy. Our strategy is very clear. We want our properties to double. That's where the money is. So if I buy a $500,000 property and it doubles in 10 years, I've made $500,000. Give me another strategy and give you $500,000 out of one property for less than $20 a week. Seriously, imagine you putting $20 a week away into the bank or in Bitcoin or in stocks. You're not going to make $500,000. That's
no way.
what I'm talking about with our strategy. So awesome advice. Thanks again, team. Moko, you're welcome. Thank you so much for joining us.
How long have we got, Georgie? What's the time?
Thanks, George and the team. Love this live shows and your valuable answers. They really help to clarify the doubts. God bless.
God bless you. Oh, that's beautiful.
Avi, thank you so much. I really appreciate it. So look, guys, we've nearly gone an hour. We've gone really.
Oh, wow.
Yes.
I've got to get to some coach. I've got to go do some coaching.
I know you do. Look, have fun at your coaching. We're going to say goodbye to everyone. Guys, thank you so much for joining us.
Hey, so good. Thank you for joining in tonight.
Charmaine, just type in, just do a message and say, meeting with Charmaine. If you want to do the 14-day challenge, type in 14-day challenge. Thanks for joining us. Really appreciate it. You know what? I really love it. My favorite day of the week is Wednesday night when I come and interact with you guys. And tonight, everyone's been, giving me energy by asking questions and commenting, and I'm just saying thank you so much. I'd love to see you next Wednesday. Okay, so let's have a look. One more question. You mentioned once before, George, not to buy more than one property in the same area. Do you mean areas such as suburb or council? Yes, can I explain why? Look, we've gone an hour. I'm going to have to do this next week.
We'll save it for next week.
Yeah, sorry.
That means same bad channel, same bad time.
Come in next week and I'll talk to you about the 5 ones and how to keep yourself safe. And I'll show you exactly why we don't buy, duplexes, why we don't buy the same property in the same suburb, because this is so important. It's one of the keys to this. And this is actually similar to what stock market does, where you don't put all your stocks in one company either. You share, you diversify. So there is a bit of diversification there.
Spread the wealth.
Yes, sometimes I am. So it's good. So guys, thank you so much. Have a great Wednesday night. See you next Wednesday. See you
it's better than see you next Tuesday. We'll see you next Wednesday.
See you next Wednesday. Bye-bye.